security, protocol, token, financial instrument, or other tradable asset, or any investment strategy. It is not offering to sell or soliciting to buy any security or asset.
Hi, everyone. Welcome back to the Pirate Pod from Arrington Capital. Thanks for joining us. I have Andrew and Andy from HypurrFi. I first met Andrew earlier this year, 2025. HypurrFi is a prominent and very quickly growing decentralized lending protocol native to the Hyperliquid ecosystem, a non-custodial platform that enables users to deposit assets for yield, borrow against collateral for leverage strategies, and mint its synthetic stable, which we'll get into. Hyperliquid has been very quickly growing. We'll unpack Hyperliquid. We'll talk about HypurrFi and dive in on what they're doing today and then what it looks like in the future and what the longer term vision is. I like to start off all of our podcasts, Andrew and Andy, with sort of founder stories and backgrounds, how you got into the space and how you ended up founding HypurrFi. So Andrew, why don't we start with you? Give us a little bit of your background and then get Andy.
Yeah, great. Hey, everybody. Pleasure to meet you. Yeah, I've been in crypto, a little bit of my background, since pretty much the beginning. I've always been found myself being early to things that I just captivate my time and attention. The internet, I was online since 1993. Crypto, got into it in late 2009, early 2010. And so it's just been one of those things where having your mind blown and understanding a little bit enough to be troublesome in the early days of crypto became this saturation point for having to understand more. And so I just got obsessed. But always found myself outside of a circle that I ever understood this besides online communities. And so started building products and services actually full time in crypto back in 2017 with my co-founder Scott. And then HypurrFi kind of spun out of what we were doing at last, which was originally building for a chain. We started building DeFi products and services, and HypurrFi is really a subset of that vision. So really excited about where we are and what's going on. The Hyperliquid ecosystem is crazy. And on that journey of building, last and this idea around sustainable cash flow economics, actually met Andy. Andy's our first employee that came through the door. So I'll let you give your backstory there, Andy,
Andrew,
well.
real quick, what came first, Hyperliquid last or HypurrFi idea?
Great question. Yeah. So last was our idea around building a chain that had cash flow enabled economics at the heart of what it was doing. So anything that you build and that captures value, you want to feed that back top of funnel for growth to grow the overall ecosystem in a sustainable way. Token inflation and emissions was what a lot of people were building and their intention economies around and trying to capture value that way. And it doesn't lead to sustainable long tail outcomes, having ridden through a lot of these DeFi products. And so our thought was if we built a product or service that was all around generating revenue and then push that out as incentives, we could grow a different way, more organically. And HypurrFi is actually was our realization that what we were building our chain for, our tech stack designed for, the application layer that we had constructed for it was our financial engine at the heart of everything. We realized that our competitors that we were thinking around other chains, other L2s, was no longer Arbitrum and Base and Optimism and Solana. We realized, as traders that we are, the mind share and attention was rapidly shifting to Hyperliquid as being this place where hard revenue is happening. And so I would say what we were trying to build was a custody EVM. You could imagine kind of like HyperUnit plus an EVM was our original thesis. And I'd say what we got wrong was hardcore revenue generator at the heart of this thing. We were a slow growth revenue generator, and Perps is an aggressive, an aggressive revenue generator. And then as we started playing on the EVM late last year, we realized that this is highly performant. It's where we want to be because it's so close to the nexus of trading, deep liquidity, highly programmable. It's essentially you've given me a composable on-chain Binance. And so when that was the realization for us, it was man, this is going to generate way more revenue, purely deflationary economics. We have to go into that. So we launched HypurrFi as the subset of what Last wanted to be, the application layer for it. So kind of
Awesome.
a little bit of a journey to get there.
And then Andy, give us a little bit of your background and what made you walk in the door at HypurrFi.
Yeah, I forced myself in the door on Andrew and Scott. Thankfully, that worked out. I've been dabbling in the space since 2017. I was a professor of communication, so I did media research before crypto, and eventually I studied video games and social media, and just any new technology really, and social adoption and mechanics around it. I got tenure, and that lets you like veer off the path. And so I was like, what are all these other cool new technologies that I've missed by being in the publication journey? And crypto is one of them. And that was right as the ICO mania kind of took off. And all of a sudden there was a ton of educational resources and podcasts and everything. So I absorbed everything, and I realized, hey, I don't have to study the future. I can really build the future. This is like wide open. And so I made the jump and worked for a variety of startups and fintechs and whatnot. My most notable pit stop along the way was Chainlink. I worked for Chainlink doing content. So I did podcasts and streaming because I could talk about complex technical projects without, veering into token go up language. So they let me have a microphone, and that was an introduction to everybody in DeFi in the space. And along that journey, I met Andrew and Scott and found out what they were building with Last, and just the idea of sustainable economics, like start cash flow, make revenue actually work for end users as well as chain operators, and that was an exciting enough prospect. And then as we put the team together, just got even more excited. Our team is killer. They're great. they're just an awesome group. And so once Hyperliquid started to really, we figured out what was going on and how we could play in that sandbox. It was a no-brainer. It was the full team effort to just pivot and say like, this is where the magic is happening. And because it's real users, it's real revenue, it's real cash flow, we can do a lot with this, and we can build whatever we had imagined as the long tail vision of Last right here and right now, and it's ready to go. And so we did, and it has been no looking back. It has been awesome, like the growth. You mentioned organic growth. That's something we're very, very proud of. We don't do paid TVL. We don't do rented TVL. We make products that people want, and we do our best with that. And so far, it's proved pretty successful.
That's awesome. Thank you both. Andy, I feel like it's a little bit of a stretch to say there was an abundance of content to just dive into in 2017, 18. That's when I came into, and I remember really struggling and drowning, but I'm glad that you thought there was enough content.
I found a podcast and these guys talked, they talked Bitcoin, and I just joined their Slack or whatever it was, and there's 20 of them. And so I made friends that way, and that's still how it is today. You can still find those content communities, but there are quite a bit more now. You're right.
More resources, I would say.
Yeah, more resources.
Okay, all right, moving on. We haven't had anyone on the podcast that's been deep into Hyperliquid, and so I want to take a step back. I'm sure you get this all the time because you're such a prominent project in that ecosystem, but we're doing it here again. Let's take a step back and just talk about Hyperliquid. For someone who is newer to Hyperliquid, give us your quick take. What's your overview? What makes it stand out? Why Hyperliquid versus Solana or ETH? Performance, primitives, a community, like hit all those elements, but let's just keep it focused on your take on Hyperliquid right now.
Yeah. So I think we gotta look at, well, first off, what is Hyperliquid? Let me just define that right quickly for any listeners out there. So Hyperliquid is a new exchange, L1. That's what I'm kind of like framing it as now. It is a high throughput, high frequency trading platform for retail or professional traders alike. Highly deep liquidity. You can think of it like, you want to coin a good phrase, the AWS of liquidity, which gives you this access of an open trading platform that anyone can kind of communicate with. And so it is one of the most liquid venues for trading perpetuals, which is a form of, it's an instrument, it's a future. Go look it up for those that don't know. But what's cool here is that it has an EVM attached to it. So, it's this high throughput machine that has an entirely programmable VM ecosystem, as well as the unit economics of the actual, like the asset here, Hype. It's a purely deflationary token. So like really hard economics here. The flywheel is aggressive. It minted a whole lot of multimillionaires, presumably some billionaires, as a result of the TGE. So there's a very fervent community connected to this right now. And so a lot of reasons why you would, choose this.
And were those, we should unpack that. Were those sort of early adopters and early builders in Hyperliquid that kind of
traders?
Yeah, traders predominantly. So, why this place is so cool is like these early users, they are largely have not been exposed to DeFi prior to the EVM going live. They have, presumably heard about these different options and lending markets and things that you can do. But if you learn about their backgrounds, a lot of our users have come and explained where they come from. They sat on like commodities trading desks, and Hyperliquid, they just happened to follow into it because it was like a common like water cooler conversation that was happening amongst these firms is like people just find their way and like this place is amazing. And so the points that were dropped in the actual campaign, like they took no VC money and it was completely open to the users. And so all these early participants that were using Hyperliquid, made money, lost money, whatever, they were heavily rewarded here with a large chunk of the supply. In fact, all the floating supply right now of the asset is entirely of like basically airdrop. A little bit of yield now that the actual network has been online from a staking perspective, but relatively speaking, is a lot of generational wealth was created. And so you've got this fervent user base that are largely traders, and that gives you the coolest hotbed to build inside of, because it's a group of users that are more financially savvy or are willing to become more financially savvy than your average DeFi user, and they're in abundance. If you were building on Ethereum or some other L2 and you're building a DeFi product, sophisticated users come into your product with maybe 1 in 20, 2 in 20 if you're really lucky. And then, like, if you look at what's going on the Hyperliquid right now, sophisticated users are probably 17 of 20 of your user base. They really care about finance, but it's funny, they don't know DeFi. So they're really uneducated in a lot of these core mechanics that we've been using, for the last 6-7 years in DeFi itself. So there's an education component there, but for a lot of them, they're like, why is this so simple? Like, this makes, like, why would you do it this way? It's like, well, we haven't had a high frequency environment where we could build different things. We've had to build for the lowest common denominator, chain speed, user, whatever it may be. So it gives you a great place to have like a really fast feedback cycle with users. And I think that's the most important part about building these days, is being able to get to the root of a pain point for your users so that you actually create value for them, such so that they stick around. And because it's so easy to spin up stuff today with AI that if you aren't actually listening and building what they want, they're just going to go find somebody who is.
So that is what Hyperliquid is, this platform, but it was such a good product on the performance and the liquidity and the UX, just like, clicking around in buttons. It's a very familiar experience to traders. And so the traders came and actively used it. So as that airdrop happened and they started to explore, like, how do we become, community members, it was already as users. And that is, so to me, what Hyperliquid is, it's this exchange L1. That's a great framing, but it's also this community of traders, highly active traders who are willing to take risk. They want risk. They want to figure out how they can put their idle funds to work. And they're this financially savvy group. And so when we go and we build there, it's not just building DeFi that's been done. We are actively building for specific use cases for users that they ask for. And we have those conversations with them, and they're not shy. They get into our DMs and say, hey, I want more, more risk on this market. I want to be able to take out more. I want this asset. And so that's incredibly enriching as a builder. Like, oh, okay, yes, I will build specifically for a person or a small group of people who wants this market, and they're able to move in size too and come in and really make a difference on those markets. So Hyperliquid is this platform that has created this movement of highly sophisticated financial actors that want access to DeFi.
And were either of you or was HypurrFi building on it before TGE, or were you sort of post TGE? We're going to get into HypurrFi, but so let's stick to Hyperliquid. It was just that one-off question in terms of timing for you all.
Yeah, so we were on the testnet before TGE kicking around internally in terms of how this was sort of qualifying, like, is this a place we can actually go to? Because the team, and this is one of their loving categories, is they're incredibly secretive. Nobody knows anything ahead of time. So when you know that like a TGE is coming, until you knew the hard date of TGE, it was kind of like hard to think and to frame specifically how this would go. But one of the cool parts was, as an airdrop recipient, you got access to testnet hype early. So you had access to go and, you were airdropped on the testnet chain. So you could go and kick around and see things. And so for us, like, we pride ourselves in kicking the tires early and try to qualify this. But we did come at it as the lens of like, shit, this is actually our competitor. We need to go see what that's like. We got to go like understand and prototype here as early as we possibly can, to understand if this is like going to be a real problem. Because if the tech is not matured, like, oh, maybe they're not going to launch it for a year or two, right? Like, starting a new chain with an EVM is no small task to actually get it to go and scale, having that we went through this whole process ourselves. But then you start to read more about what Jeff is talking about and all these things, it becomes like, it's so obvious. Yeah. Like, okay, in retrospect, everyone is coming and everyone is now a Hyperliquid reseller. Got it.
So their TVL has gone to like many, many billions really recently, mostly driven by perps volume, the hyper EVM growth, all of that. What's your take on how the ecosystem has evolved since the launch of the Hype token? which was a couple months ago, I think.
Yeah, November 29th, I think, was the exact launch date of it.
Oh, so we're coming up to a year.
It'd be a year exactly,
Yeah.
yeah. And so that's also another topical point. Team unlocks start in November as well for the Hyperliquid core team. So one of the cool things is like, the EVM only went live in February, which is also a good call out as well. So we had, we didn't even have staking originally. We had the token came out. We couldn't stake to anybody. It was fully permission validators just to take people through the canonical journey. Eventually, we got permissionless validators, and people could spin them up and vote in the whole process. So it's been a very gradual decentralization of the actual chain itself. So from an actual governance management facilitation perspective, we've seen massive growth. USDH ticker auction just happened. It was a purely validator driven decision. Validators staked for a protocol or project that they wanted to back, and then you could redelegate over the period of 4 days. So it's an interesting spin on governance. The EVM itself has developed rapidly. We've seen so many teams start to come online from the early days of literally being nothing that we have to literally, we brought our friends from Den who do safe deployments to actually bring facilities on chain early so that we have places to manage and build from. And so things have rapidly grown. The adoption of the chain is significantly higher now than it ever has been. Circle just adopted or deployed rather USDC yesterday. So very topical in that respect. Stable coins of plenty want to come. There's a meme, everyone is coming, and it's never been more true than today. It's just every day there's another announcement of someone else that's adopting Hyperliquid. So we're very bullish in terms of what this means.
Something unique about the rollout of the EVM, the core team, the Hyperliquid team, they launched the EVM and said, here's the docs, good luck, and figure it out among your community. There's no grants for RPC providers. There's no grants for oracles. There's no grants for explorers. And there are still not, there weren't. And so instead of going to, if you go to a new Altel one that launches today, they take the money they raised and they go and pre-seed all that stuff so that developers can come and they've got the tooling that they're familiar with. And so that's a risky play, right? Here's a chain, but it doesn't do anything unless you figure out what to do with it. What they counted on and what worked is people like us said, okay, who cares? We'll go make that happen. And so it was a slow rollout. Those first weeks, there was not a lot to do. It was hard to do anything. The explorers are janky. It's just some people who threw something up from community on the EVM side. But then over time, that's what we've seen is sophistication of the infrastructure that comes out. Pith has been a great partner for Hyperliquid and us, not because they're an official partner of Hyperliquid, but because they said, okay, we're just on the EVM and we're going to make oracles go there because we think it's important to be there. And more projects are figuring that out. And so as that infrastructure has been built out, it becomes easier to deploy. It's still not that easy. There's still, traps that people find, and it's a little bit of a mess on the sometimes. But that's the slow rollout has been very organic, and people are coming. Circle launches yesterday. DeFi protocols. There's a new one announced every week, and that's our meme. Everyone's coming. So that's what we've seen. The development of it is people are just realizing okay, we just got to get there. Whatever it takes, we got to get there, and we got to figure out our strategy for it. And so, organic growth.
Last question that's more Hyperliquid focused. Where do you see the future of it going? What about RWAs? What about compliant DeFi? What's the future of Hyperliquid? Your take right now, 1 year in.
Yeah, I can give you a really hot take. It's we are just seeing the tip of the iceberg here. One of the coolest things that's happened is a third party proposed a new HIP today. Okay, so this is HIP 4. We want to do poly market style event things. So then Jeff, who is very held to the chest around things, responded inside 30 hours and gave a really well reasoned response, asking really good questions. You're holy shit, real time feedback from the core team here. We may actually be taking trillions of dollars on chain. If this is the reality that we can suddenly the community have real grassroots style, community first driven governance here, where we can actually all have a voice on what we want this to be. This starts to become a much more credibly neutral place. And certainly stablecoins want to rush in, Forex markets might maybe want to settle here. You get access to perps, payments can maybe go delta neutral across, reconciliation timelines. There's a lot of cool stuff. RWAs, we're talking about physical assets. Literally, we're building an index of Pokemon collectibles. And so from the early days, people want to have liquidity on these. They want financial access. And so these are highly liquid instruments that it's all still being done on like auction sites like eBay and all these vectors. And so time to modernize a lot of this, like, locked up liquidity. And it's just a fun way to go end to end on a real world physical experience that is highly relevant to a Gen Z audience who's a big predominant user of crypto. And so, the response here has been fantastic. Everyone's excited by being able to just buy partial access. And I kind of like think about it from the frame. If you remember back when like people were buying Dogecoin in the early days, they thought they were buying a part of the actual Doge meme. That was like their the intrinsic value that they thought they were getting from their purchase. And in cases like these, these physical assets, you are owning a fractionalized component of that. So I think there's a lot you can do here in terms of broadening the access to liquidity for all these different things, as well as going up the actual TradFi stack and saying, what about corporate bonds and municipal bonds and all these things that are more boring? How do we modernize the stack for that as well? And so this gives us a way to kind of have fun as well as figuring out some really cool TradFi stuff.
When it comes to Hyperliquid and the future, they don't need to be the distribution. The Hyperliquid team, they don't need to go out and do marketing campaigns and find new users and do that. They've implemented builder codes so that anybody can deploy a Hyperliquid perps DEX from whatever mobile app they want. And so if you want to deploy it directly to one particular country or one particular subset of assets, and you've got perps and you've got spot, you can do that. And then those teams are in charge of distribution and they get a fee. Hyperliquid gets a fee. The assistance fund keeps buying back the token and it benefits the ecosystem. So when we look at this, we say, okay, well, what do our particular users care about? We might not care about absolutely everything that Hyperliquid does forever. For now, we do. Like, we're taking that opportunity. But maybe there's niche elements that we really want to focus on for different sorts of markets that want a particular exposure, or they want more private, lending markets that are tied together, but they can still go delta neutral on perps through our builder codes engine. So it's all in one interface. Like, that's the future of Hyperliquid, is everybody else reselling Hyperliquid, because it's this permissionless deep book architecture that lets people just tap in to one of the most compelling, if not the most compelling products in crypto, perps.
Speaking of being helpful and productive to the ecosystem, let's dive in on HypurrFi, which you guys launched earlier this year. You've got a TVL well over 300 million. My numbers are probably off. You've got fees, you've got revenue being generated. How would you describe HypurrFi as it is today?
Yeah, as it is today, it's lending, borrowing, and we're getting to spend at this point in time. But we really try to be like a debt facility for users who have crypto, but also working on those that don't, in terms of like how they actually get exposure to these ecosystems as well. So we're trying to be that debt servicing rail facility where we want others to build on top of us, or just use us as an actual like lending, borrowing product. And like, that's the atypical use case. We like to call it like, targeting tax advantage generational wealth.
You've been moving super fast. What have been the major milestones in 2025 that have driven this? Like, how has this user adoption trended? What do you think's been sort of driving that growth for you?
Well, to launch, we had to get the most basic product out the door and robust and live. And so that's the pooled markets. If you're familiar with Aave, they are Aave v3 code. And so they're very familiar. And that's basic lending and then borrowing from the pool. And it's really straightforward. Along with that, a synthetic dollar, USDXL, that's a launch, because people just needed some, dollar pegged instrument to be able to do leverage and do the things that they wanted on chain very early. And so that was like go to market first thing. We just got to give people the most basic training wheels of DeFi so that they can start doing the leverage and the lending and the borrowing that they want to do. So that really a huge milestone. I think we lost Andrew briefly. But then once that launched, once we had pooled up and running, then we also had a lot of requests from users, and direct requests from users have been what a lot of our product development is. And so we had requests to list L-Hype, for example, which is a derivative. It's a loop derivative of stake type or K-Hype and Hype, and they just do the levered loop up to get levered staking yield. Well, we can't put that in the pooled market, and so because of risk, and so now we have isolated markets that we launched because of that. So those are our three major products, the pooled markets, the synthetic dollar, and the isolated markets. We've also launched a swap under the hood. There's a swap product that people mostly don't know about because the way it works, it's not like super flashy, but it's more efficient for our users who do want to swap and for our own liquidations and needs. And then there's a number of other products coming out to serve those other ones better. In particular, the isolated markets. We've got a new structure coming out that will enable vaults. Like you would think of as DeFi vaults, Morpho style, but they're not Morpho. They're a little different. To give people yield on stables, on whatever assets they want to do, curators, all that stuff.
All right. The other thing we want to touch on is that you're not the only one that has created sort of lending, borrowing opportunities within the Hyperliquid ecosystem. There's Felix, there's Hyperlens that are also lending. How's HypurrFi differentiating, especially when it comes to yields and then also risk management? Can you talk to us a little bit about that?
Yeah, very fair question. When we launched a product that people know and understand, and that's an Aave fork. And so if you look at it now and you look at the pooled markets, it looks familiar. It is a fork, and it looks like any pooled market. And so there's not a ton of differentiation in that pooled market structure. But we see that as step one, right? Let's make sure that we have lending and borrowing and users, the people that really understand what they want to do. And then we can start to build out more specific niche market types of lending. And so a great example of this is we're not looking just to replicate Aave forever. Like, how do we make more sophisticated markets and take advantage of Hyperliquid's liquidity and user base? So, for example, recently we announced that we bought the Pokemon ticker, PKMN ticker on Hyperliquid Core. Now, this is in partnership with Fidgetals. And what this is what it will be is we have started to acquire Pokemon base sets. So the original sets, PSA graded 8, 9, or 10, only the top graded sets and only the original sets. And when you have one of these,
the physical Pokemon sets,
And so Fidgetals, our partner, they accept these and put them in their vault. It's like a max security vault for curators and collectors. But then they mint that as an NFT, and you can use that NFT to mint these Pokemon tokens, PK.
You can only mint that NFT if the actual physical device is in their vaults and they've like verified that it is what it is, right? Yeah. Okay.
Correct. And so those tokens now, the PKMN tokens, we have enabled or will enable a spot market on Hyperliquid Core. And so now you can trade that, and you can trade the speculative value of the fractional version of this base set. What's more is now we can enable lending for that. And now that's a particular niche market that who knows if it'll make it into pooled. That might be a little more niche, a particular thing, but people who have these collectibles and they believe that it will rise in value, or they just don't want to sell them for whatever reason, now you can borrow against that. That's idle capital sitting in your closet. No, give it to a professional curator and then borrow against it and go spend and take additional risk where you like. Or tap the card and spend against them and go buy coffee against your Pokemon because you're just taking out a debt on that. The future of that then is also perpetuals, right? Because now we have access to Hyperliquid and this order book, the HIP3 perpetuals markets, where now we can do perps on Pokemon, on the viability of this base set offering. And so that's an example of, yes, if you look at the early days of HypurrFi, it's pooled markets, it's some isolated markets, people are doing borrowing against LSTs and stables, and that's fine. But we are going to different places, and specifically where our users are asking. So Andrew talked a little bit about we make markets for particular individuals and funds and users that have a specific use case. We have that capability now, and instead of just making the big vanilla market that anyone can use for whatever is available, is no, we can make specific use cases and markets. Vaults and the strategy vaults and LP structures, delta neutral strategies. If you look at some of our partners now, they're already doing this to make these particular financial instruments for particular subsets. And that's the kind of thing that allows for things like municipal bonds in particular regions and particular
opens a whole new
regions,
can of worms
insurance.
for a whole bunch of RWAs and a whole bunch of other different things. Right.
Right. Like what we don't talk about too much, but like the credit card is a Trojan horse for KYC to allow you to be a participant in these broader markets.
Back up for a second. You all also have your own credit card integration too. I forget what it's called, but tell us about that. And then is that what you're talking about, Andrew, specifically yours? Okay.
Yeah. So one of the cool parts about this is that we do have a card offering that allows you to spend against your crypto in real time at like 150 plus merchants. It's an over collateralized credit card. It runs on Visa rails.
150 million.
Yeah, 150 million merchants globally. And so that's like literally everything that runs on Visa. And so this is really powerful because it allows you to, operate in two kind of modes. You can have the borrow mode where you just in real time lever against the pooled markets debt facilities, or you have spend mode where you're a supplier and you want to spend your yield. And so like if you had, maybe this is a paycheck offering now, or you put your capital on chain, you're farming DeFi, you can just spend that, like buy coffee, food, groceries, flights, watches, you name it. It works on everything. And so it is a KYC enabled product, but a cool part about that is that like it's so lightweight KYC. It's just, are you who you say you are? And then from there, though, you now are a known participant to others that may want that may be legally required to know who holds their debt. So you look into like, could be corporations or other DAOs that want debt facilities, or companies that want to come on chain. They have their own treasuries. They might need to know who they're actually lending to, their counterparties are. And so this allows us to like scope out these, quasi-private kind of facilities where, it's a, still like underwritten risk from like a risk perspective. You need to have like ample liquidity and stuff. But if you have capital or you have, credit facilities, we want to just be able to service that debt need. We think everything should come on chain from an overall debt perspective at some point in time. And so bridging that in, we think that, tokenized stocks are a great one. You look at like what Superstated's doing, bringing Galaxy on chain as an example. If you know who these people are from a KYC perspective, then you can like issue them, like a simple soul-bound NFT or something that gives you access to all of these other offerings. We have our users that are asking us to help facilitate on-chain mortgages for them. They want to back mortgages with their collateral. And so we've been talking through tri-party agreements with some custodians and some banks around how you can get a real 30-year mortgage that's over collateralized with your crypto, such so that if like the price ever went too low, your liquidation is buying the house. And so people want like this tax advantaged offerings to take advantage of the great rates you can get on mortgages, but they want to de-risk the whole process because they don't actually want to be, if you think about it, they don't want the risk of being in debt. They just want to know that they can have, they're kind of like having their cake and eat it too. And our users will pay a premium for this because they'd rather be tax advantaged than have to go spend that capital and go do it. And it's not much different than you just going to our product and taking out a loan and then going to the bank and doing all that stuff. But our thesis is and this is kind of how the credit card play is kind of like influencing that, is one of the biggest boons of the credit card product is how frictionless it is. It feels so good to do this. Like spending feels magical. And so we believe in a lot of capacities, like you break down the friction of having to put all this context, like, oh, I took it a loan. Okay, when do I have to care about closing this position so that I'm not actually exposed on the house or the property or the thing or whatever it is I'm buying? Wrapping all of that into a single offering where you just have full control, and you can kind of think about it like having like a wrapped HELOC inside of the house purchase that's like backed by your hype or by your stables. Because your stables could print like 12, 15, 20% on chain and just pay your mortgage for you. And so like that is a really compelling offering to a lot of our users of like, that's what we want. So it's continuing to have conversations around like influencing users' behaviors by showcasing like how much money they actually have. I think a lot of users forget that because of how much friction actually has to go into the whole process. Because it's not just about taking money out. It's like, shit, are these taxable transactions? What do I have to do here for these facilities? Like, who am I beholden to? What's the actual slippage I'm trying to off ramp here? So hopefully we can package a lot more of these things into like bite-sized offerings for our users. And a lot of our users are actually influencing where we're going with our product too, because we're ultimately servicing their capital needs.
Do you think you're catering to a lot of Hyperliquid maxis who want to like leverage without selling hype, or how are you thinking about that? Or is that not a thing?
Yeah, totally. Most of our user base is the top 1% of hype holders in like terms of like their overall wealth. A lot of it comes down to like, you can just think about it from the framing we use is tax advantage generational wealth. So many of these users are in like in a tax advantage position where they haven't had to sell anything because they can borrow. And so like it's a lot of times it's not necessarily looking to compound leverage and to go like spot long, although a lot of our users are spot longs. A lot of them just love to borrow against hype, like in short everything else. So just like they'll borrow Bitcoin and they'll borrow ETH against hype, and they'll sell that to buy more hype. So they're kind of long, but also short. They're like trying to like take directional bets here. But then we also just have users who just like don't want to sell and they just want to use it as their primary means of payment. They get paid in hype. They just want to use that as a facility, to not have to sell. And I think that's like the big unlock for a lot of users here on the whole hyper EVM side of things in general, is just access to liquidity.
Keli, the story of the past 6 months has been hype maxis who have a lot of hype, who are traders. But what we've seen more and more over the past few months in particular is funds traders, curators, all sorts of other people coming and asking for other assets. So they've got some huge position of gold, of tokenized gold, and they want to put it somewhere and build a strategy. And a few months ago, we just told them like the liquidity is not there on chain yet. Like we're working on it and we're trying to figure that out. So yes, it has over the past early days been a lot of hype maxis, but that is rapidly changing. Stablecoins and T-bills come into Hyperliquid, like a massive influx a couple of weeks ago with TH-bill, with some of these other tokenized T-bill type products. More gold is coming as well, all sorts of other sort of metal type products. And then the stablecoins, like the recent weeks of the stablecoin banter, let's call it governance on Hyperliquid. Every stablecoin is coming, and so people are just realizing like this is a good place to trade and a good place to build financial products. And so when we look at that, yeah, there's Hyperliquid maxis, but there's also people who just like they just want the most action on the books. They want the volatility, and they want access to the services that we provide on it.
And I just want to jump right in there. So like one thing we haven't talked about, the public rotation of billions of dollars of Bitcoin into ETH happening on Hyperliquid spot over the last couple of weeks. Like we also like shouldn't just glaze over that. Like that is people realizing that
what's the volume there? What's the number?
I think the first clip he did was like, correct me, maybe like 3.8, 4.2 billion, somewhere's in that range of Bitcoin sold, rotated into ETH. Like there was a mass premium. Like
all on
like
Hyperliquid.
All on Hyperliquid, all
Spot.
with no KYC, all spot, pure permissionless. And so like, and he's back, right? So this is an ancient whale who hasn't moved funds in like over a decade. It's just like, oh, okay, yeah, Hyperliquid, screw the sexes. Like, why would I go there and risk, any kind of OPSEC? I'm just going to trade from a wallet. And so I think that's insane. Watching that go live, you're just like, I don't even understand what's happening. Like, I really can't believe it. And I know technically what's happening, but like you look at the public forum, it's like no one knows who this whale is, and it's just an ancient whale.
What do you think? It's interesting, but what do you think the other gaps are? Whether it's in some ability to do something as basic and simple as that it's shocking that, hasn't been done until maybe nowish, right? What are the other gaps in basic stuff as well as DeFi that are missing that you think you'll be able to solve with HypurrFi, with Hyperliquid?
I think what's going to be interesting here that Hyperliquid's going to enable is Forex settlement. A really simple thing like that, right? Like, if you look at, from the card product lens, right now, when you transact around the globe, you pay predominantly in US dollars, and then the Forex conversion, there is a settlement risk between assets and currencies. They obviously trade like anything else. So someone who is doing large scale payment process, depending on where they are, like they may have to put a ton of money out to go delta neutral on terms of their overall settlement exposure between currencies. And I think a place like Hyperliquid becomes that prime venue where, oh, well, actually the EVM could just become like a really big hotbed for Forex liquidity. And then suddenly you've got perpetuals that you can go short or long the opposite side of your book that you need to settle. So maybe you can settle with way less money and get the same overall coverage, which means that prices can come way down. And suddenly there's way more demand for throughput, which will drive, volume up, which means more liquidity. And that I think is what revolutionizes, you think about where this is coming from an overall chain perspective. Like Hyperliquid's position is actually probably going to be highly competitive in these stablecoin chains. If you look at like Tempo or Arc or Plasma as an example, these are all going to have to now deal with the fact that Hyperliquid's making it incredibly easy and accessible for stablecoins to trade. So much that actually quote assets, like on the actual exchange now, when trading between each other, trade at like 80% fee reduction. So they're very much, targeting these stables as wanting to be highly liquid, so that fees will be so low to swap between them. That really puts I would say like the gears to these stable chains who are trying to offer that highly, cost minimized experience between stablecoin settlement. But Hyperliquid just offers so much more, but now also making it really cheap for stables to trade. So I think it just becomes one of those places where liquidity just keeps black holing here, and it keeps becoming the source of truth around real good pricing.
Can we talk about incentives and sustainability for a minute? Obviously, there's a lot of hype whales out there, and you've got organic borrowing, 8 to 20% APY without incentives. How are you thinking about incentives and sustainability when it comes to HypurrFi specifically?
Yeah, it's been a big part of our whole design thinking. It's funny. My background is actually the wireframe of value flow from the old chains design system that I still, hold core, where it's, revenue needs to be like spent on growth. Okay. And so there's some ways that you can best approach that. Is it incentives that are going to drive the growth here? Is it strategic investments? Some cases it's buybacks. And so it's really around figuring out what the best like pragmatic spend on capital is. And a lot of times it's going to be incentives, like, raw economic incentives. What's cool here is USDXL is a big part of our incentive equation, is that we do have our own synthetic dollar. What we can do is we can spend our revenue from from the protocol development and use that to buy T-bills or other yield sources that can back new USDXL that can get paid out along the way. So users are remunerated along the way and able to facilitate. There's been a lot of conversation in our ecosystem around other protocols contributing to the hype accumulation and distribution aspect of things. And it's not a bad model, but if you think about it from an overall like growth perspective, if you just want to spend your money on hype, is that the best way to incentivize a user's like behavior shift or to get what you need out of the equation? Because that's the only way you get sustainability, is getting them to actually spend money on what they really want, not just what you're paying them to. So it's kind of like, how do you figure out like how fast you can get to that point of the minimum spend on an incentive to get real user behavior? So that's what that's what the real pursuit is. It's trying to incentivize you to come walk with me to find a place that you actually want to drink from the fountain or drink the water from, so that you'll come back to that every single time. And I don't need to pay you to go anymore. And so trying to find that for every user is a challenge, but finding it for pockets of users starts to become easier and easier as users like this one feature. So you get 3 or 4 pieces of feedback that build that next big core piece of feature. And so I think it's really around like taking revenue to incentivize the user to like to bring you to that next pocket of capital or next pocket of liquidity that's going to grow the pie bigger. And because that's really like, I think where the best economics come from.
So I think about it like this. Do our users want us to spend our revenue on KOLs, or do they want us to spend it on a product that they and others will use that'll generate more revenue? It's that simple. And so as that revenue and cash flow comes in, we think very critically about this. We have a points program, right? Like, so we are giving out, incentives and loyalty for use. But when we think about like, what do we do with this? We have revenue now from USDXL and from the lending markets. How do we deploy that? Should we do, a big, billboard campaign? Should we get the Times Square thing? Well, is that going to affect our users very much, or is that just going to be a good media option? And so that's how we think about this whole design in the future too. It is, what is that next product that the revenue and that the source of that cash flow and that flywheel can continue the flywheel? And is that a new product like Pokemon? Oh, all of a sudden we'll need liquidity for those markets. All of a sudden we'll need to be able to acquire base sets to build out the collateral of that. That's the example, is like, well, here's a product that uses revenue to build that off of. And so how can we further that? What's next? What's after Pokemon? That's our sustainability, is keep building the products that people want.
Yeah, very aligned with Hyperliquid in and of itself and the ethos that happens there, for sure.
Very.
All right, just to wrap it up, what does it look like 2 to 3 years out for HypurrFi? Are you the go-to lending layer for anything, anyone, anywhere? Are you expanding into agents? Are you dealing mostly with retail? Are you dealing mostly with institutions? What does that look like for you guys?
Yeah, I think we're going to expand a lot into private credit, try to expand the offering for institutions. We have a lot of demand on the corporate side of the card. So people have all these treasuries that they want to use, and they love the idea of the borrow positional bet or like the savings aspect of their money. And so really expanding that B2B offering in terms of how that comes out. I like to say like a lot of things that we build make us look like a neobank or a prime broker. We aren't trying to do either of them, but we constantly find ourselves building things that either improve execution for a user, like an agent that operates on Hypercore and on Hyper EVM, can do perps management or do, escrow voting for, things like kit and swap or whatever it may be, or is it going to be more financial services where we go into private lending, private facilities, private banking? We've had a lot of relationships on our conversations on the Forex side of things. So for us, I think it's going to be heavily focused still around like obviously like debt at the core of it, but also a lot of like trying to improve liquidity for users in very like bespoke markets. So private capital markets, connecting with public ones, as well as more bespoke lending facilities.
Fantastic. This is great. Thank you both, Andy and Andrew, for joining us here today. I appreciate the insights. This has been super useful. Thanks, guys.
Happy to.